Hi. Well, not much happening in the stock market today. Market Dow closed down 48 points. What you're looking at in the chart is the action from the middle of August, including the big crash on the 24th, and what it's done subsequently. It certainly could rally from here or fail. Who's to say? I have a position on. I'm still hopeful that we fail. There could be a rally in the interim, obviously, at any time. And looking at the chart, the problem is that with these ranges, you could see a rally of 300 points. Let me activate this cursor to show you what I'm talking about. You could see a rally from 200 to 500 quite easily, 300-point rally without really doing any damage to the perspective or the belief that we're heading lower. So that's really an uncomfortable situation to be in, because 300 points is really quite a large loss, and I'm not even sure that I'd want to buy it, because that would, around 16.5 is probably where you would look to sell the top of the range. So I'm hoping we don't return there, and that this high, lower high, and lower high keep us heading down. As I said, not much in the market, but I'll take advantage of this time to give a commentary very briefly on what happened last week, which was the Fed deciding once again to leave rates unchanged for the infinite time, it seems. Those of us who have savings are incandescent with rage at the thought that an outside party can determine what our savings should earn, and that in this case that the real return on savings should be zero. The only comfort is the fact that the damage that they're doing to others is so much greater that I sincerely believe that at some point they will be held to account. The good news is that it does certainly seem as if market participants are starting to question the Fed omnipotence. I've always complained about the way they act and whose interests they have at heart, but it appears to me that the fact that the rally was so brief last week, we're looking at it right here. This is the Fed announcement, and the rally, that 200-point rally, eliminated almost immediately. I know that central bankers around the world have to be a little concerned, because they've had in their hip pocket throughout the ability to juice markets whenever they wish, just by talking about more money, or more QE, or easier money, or whatever phrase you want to use. But the thought may finally be starting to intrude upon them that their delaying rates is really their negating their statement that everything is okay. And people are starting to realize that this group of people, men and women too now, are really winging it, flying blind. They have no idea how the real world works. They use models that seem to work, fail, they rejigger the model, add some variables, take out some variables, change some consonants, seems to work, doesn't work, they rejigger. That's what academics do. They're theoreticians. They practice what should be, not what is. And the fact that they have their hands on the throat of the economy, in this case dragging it down with reducing capital costs to the point that uneconomic projects make sense, it's all going to end badly. I anticipate a dramatic move lower in the markets. I started this channel almost exactly a month ago, and it's almost exactly a month since the crash. I think I started on the 10th or so, and the crash was the 24th, and here we are 1 month later. The market has only rallied about 1,000 points now from its crash low of 15.2, and I'm hopeful that this congestion is going to resolve itself to the downside. I still think it will. I'm just concerned that in the interim may be suffering a great deal of pain. So maybe not a cigar tonight, but in any case, still a constructive day. The market down, and thankfully, the first signs that people are starting to question the central planners here. All the best. Good luck.